The most dangerous moment in any market isn't the crash, it's the peak right before it. Because that's when everyone thinks nothing can go wrong, and that's exactly when everything does. If you've ever watched a market rally to dizzying heights only to see it crumble right after you bought in, then you know how brutal a market top can be. And here's the truth, spotting that top before it collapses isn't about being the smartest person in the room. It's about knowing what human psychology looks like when it's about to turn against itself. In this video, I'm going to take you inside my own process, step by step, for identifying those dangerous peaks before they break. We're not talking about hindsight wisdom. We're talking about real-time, live-action signals that I use to sidestep collapses and protect my capital while everyone else is still celebrating the unstoppable rally. Because here's the thing, market tops aren't a mystery. They follow patterns, not just in price, but in behavior. You'll see it in the way traders talk, in the headlines, in the way volume moves, in the tone of social media. The signs are there, but most traders are blinded by greed, and greed has a way of drowning out warnings. If you learn to read these signs early, you're not just avoiding losses, you're putting yourself in a position to profit when the tide finally turns. And that's the real difference between the trader who survives decades in this game and the one who blows up their account in a single crash. In this deep dive, I'll walk you through how I spot the first whisper of a top before the chart even shows weakness, why euphoria in the market is actually a red flag, not a green light, the subtle shift in price action and volume that tells me the uptrend is running out of fuel, how I recognize the first break that flips confidence into doubt, and finally, the moment the collapse begins and how I stay standing when everyone else is panicking. This isn't about guessing tops to the exact tick. It's about recognizing when the risk of holding outweighs the reward. It's about stepping aside when the party's about to end, even if the music is still playing. And if you stick with me until the end, you're going to see exactly how these signals repeat themselves again and again, whether it's stocks, crypto, forex, or commodities. The asset changes, but human nature doesn't. So, before we get started, I want to ask you a favor. If you're serious about trading smarter, protecting your capital, and learning to read the market the way professionals do, make sure you subscribe to this channel right now. Hit the like button so more traders can see this, and drop a comment below telling me your own experience with market tops, whether you nailed the exit or got caught in the collapse. I read every comment, and your stories help other traders learn too. All right, let's dive in, because once you understand how to spot market tops before they collapse, you'll never look at a rally the same way again. Chapter 1. The first whisper of a top. You've seen it before, that strange, almost imperceptible shift in the air, not on a weather chart, but in the market's mood. It's not loud, it's not a crash, it's a whisper, a flicker, a pause so subtle that most traders brush it off as just a normal pullback. But you lean in and listen. The first sign often isn't in the price at all, it's in the people. Your trading feed starts to feel different. Tweets full of overconfidence, chat rooms echoing with, "It's going to the moon." The same voices that were cautious 2 months ago now sound like carnival barkers selling tickets to a guaranteed fortune. And you know what happens when everybody thinks it's guaranteed. You start to see the headlines. Mainstream news, which ignored this sector for years, now plastering its front page with record highs and once-in-a-lifetime opportunity. They're interviewing cab drivers, bartenders, and first-time investors who are suddenly making more than fund managers. It's the same script every cycle, and the market never changes the ending. You notice the candle stretching taller, more desperate. Gaps appearing like potholes in the road, each one harder to fill. Volume spikes are now chasing the price, not leading it, a sure sign that the crowd is arriving late to the party. Inside, you feel a subtle tightening, not fear, not yet, more like an alertness. Your gut, sharpened by years of watching human nature play out in candlestick form, starts firing tiny flares. This isn't paranoia. This is pattern recognition burned into your bones from every top you've lived through. You look deeper. The order flow starts to smell different. Market depth, once balanced, now leans heavily toward eager buyers hitting the ask. Liquidity thins out above key resistance. Sellers don't fight. They simply vanish, letting price spike into thin air. It feels too easy. And in trading, too easy is dangerous. The conversation in your head shifts from how high can this go to who's left to buy. Because that's the real question at a top. Not how much higher, but how much fuel is left in the tank. And when the tank is full of retail euphoria and empty of fresh institutional money, you know the engine is seconds from sputtering. You've learned to spot the overextension, the daily RSI climbing into the high 80s, the parabolic slope that no healthy market can sustain, the endless chain of green bars with barely a wick on the downside. This isn't strength. This is exhaustion wearing a mask. But here's the thing. You don't short yet. You've been burned before trying to call the exact tick of a top. You know the market can stay irrational longer than you can stay solvent. So instead, you start collecting evidence. You build the case. You make a mental folder, headlines screaming euphoria, social media dripping with arrogance, technicals stretched to breaking point, volume patterns showing late-stage frenzy, order flow that feels too one-sided to be safe. The weight of these clues doesn't tell you when the top will hit, but it tells you one thing for certain: it's close. And this is where your psychology kicks in, because most traders see these signs and then they ignore them. They get caught in the thrill. They want just one more run higher. They convince themselves this time is different. But you train yourself to step back, to detach from the greed fogging everyone else's vision. You remind yourself your job is not to be the hero who nails the top to the exact minute. Your job is to be positioned so that when gravity finally takes over, you're not the one falling with the crowd. And so you wait, patiently, calmly, almost like a hunter who's seen the prey wander into the open but hasn't yet taken the shot. The market doesn't know you spotted it, but you have, and you're not gonna blink first. That's the first whisper of a top. It's not a number, it's not a chart pattern. It's a change in the feel of the market, the mood of the herd. And when you train yourself to sense that shift, you're already one step ahead of the collapse. Chapter 2. The Euphoria Phase. Why it feels unstoppable. The irony is cruel. The top never feels like the top when you're inside it. Right now, the market feels like it has shrugged off every law of gravity. Price doesn't just rise, it sprints. Any dip, no matter how sharp, gets instantly bought up. It's as if the market has a magnetic floor that nothing can break. And that's exactly why so many traders stay in too long. They confuse euphoria with strength. You watch it play out in real time. On social media, people post screenshots of unrealized profits with captions like, "Never selling." They're adding rocket emojis, victory gifs, and hashtags about early retirement. Some of these accounts were anonymous ghosts a few months ago. Now they speak with the certainty of seasoned analysts. In trading rooms, the jokes are gone. Nobody's nervous anymore. They're serious, confident, even arrogant. Phrases like, "We're just getting started," and "This is only the beginning," are tossed around without hesitation. And you know from experience, when conviction becomes absolute, risk becomes invisible to the crowd. The media feeds it too. CNBC panels are unanimous. Every guest is bullish. Analysts are raising targets so fast they can barely update their slides. They justify it with new narratives, a new era for the industry, unprecedented demand, permanent revaluation. All the same words you've heard at every bubble peak. And yet, your eyes aren't hypnotized. Because when you strip away the noise, the chart is screaming something else entirely. Price is going vertical, a slope so steep it looks unnatural. The candles are massive, with almost no wicks on the downside. This isn't steady accumulation, this is a feeding frenzy. You check the volume, and it's telling the real story. Sure, it's high, but it's reactive, not proactive. It's the kind of volume that chases, not the kind that builds. Smart money was in months ago, quietly, while the rest of the world was asleep. Now the latecomers are throwing cash at the market in fear of missing out, paying top dollar without realizing it. This is the euphoria phase, the final stretch before the turn. It's the point where the fear of missing out outweighs the fear of losing. And you've learned that's the most dangerous time in any market, because once there's no one left on the sidelines, the only direction left is down. You start noticing the first cracks, tiny intraday reversals that quickly get bought back up but leave shadows, wicks that tell you someone is quietly selling into the strength. The tape looks smooth to most traders, but you can see the hidden distribution. It's subtle, deliberate, like a chess player sacrificing pawns to win the game. And yet, you resist the urge to short early. You've done that before, and you know the market can squeeze you into oblivion before the collapse hits. Tops aren't a single point in time, they're a process. They can stretch out for days, even weeks, making the impatient trader bleed out slowly. So instead, you prepare. You tighten your stops, you scale out of positions into strength. You rotate into safer plays or increase your cash balance. You let the crowd laugh while you quietly move to higher ground. Because you're not here for the glory of calling the top. You're here to survive it. You've learned that the top always rewards patience. You remember the last time you tried to be the hero. You nailed the analysis, shorted early, and then watched price grind higher for another month, eating away at your confidence. When the crash finally came, you were too battered to hold your position. Not this time. This time you let the euphoria play out. You let the crowd convince themselves they're invincible. You let the media run the victory lap. Because you know the market is like a party. The later it gets, the drunker the guests become. And eventually, someone's going to turn on the lights. Until then, you watch. You collect more evidence. You mark the overheated indicators, the vertical slope, the one-sided sentiment. Every clue sharpens your conviction. You don't know the exact moment the music will stop, but you know the band's on its last song. And when the final note hits, you'll be ready. Chapter 3. The Subtle Shift. When the market starts to tire. It doesn't happen with fireworks. The beginning of the end is quiet. So quiet that most traders don't even notice it. Price is still high, still strong, still breaking records. But if you know where to look, you can see the first signs of fatigue. The candles tell you first. They're not as tall anymore. Intraday ranges shrink just a little. Where you once saw wide, powerful green bars, you now see choppier action, green and red bars fighting for space. The market's breath is shortening, even though it's still smiling. Then comes the change in behavior after news. A few weeks ago, bullish headlines would send price exploding upward instantly. Now, the same kind of news barely moves it, or worse, it pops for an hour, then fades. This isn't because the news is bad, it's because everyone who could buy has already bought. The fuel is gone. You start seeing more wicks. Those long upper shadows aren't random, they're evidence. They tell you that even in the middle of the buying frenzy, sellers are starting to push back. Not in a panic, in a calculated, controlled way. This is distribution in disguise. The tape confirms it. Where before the order book was dominated by aggressive buyers smashing through offers, now you see more iceberg orders, big sellers hiding their size, unloading piece by piece. The market still creeps upward, but the flow feels heavier, stickier. Every tick higher takes more effort than it did a week ago. The crowd doesn't notice. They think it's healthy consolidation. They point to every small dip as a buying opportunity. Their posts are still bullish, but there's a slight defensive edge in their tone now. If you listen closely, you can hear it, the first tremor of doubt. For you, this is the most dangerous time, because the top isn't obvious yet. If you speak out too early, you sound like a fool. The crowd will mock you, saying, "You've been calling the top for weeks and it's still going higher." And they might be right, for a little while. But that's fine. You're not here for their approval. Instead, you sharpen your exit plan. You identify the levels that, once broken, will confirm the tide has turned. You watch the moving averages start to flatten. You take note when momentum indicators no longer confirm the highs. Divergences are your quiet allies here. The chart is screaming up, but the indicators are whispering down. Volume starts telling a new story. It's no longer expanding on green days. It's heavier on the red ones. Selling pressure is starting to outweigh buying enthusiasm, but the price isn't collapsing yet. And that's the trap. This is how smart money slips out the back door while the party is still going on. Emotionally, you feel the shift in yourself. During the euphoria, your challenge was to resist greed. Now your challenge is to resist impatience. You want to pull the trigger, to take the short, to call the top. But you know from experience that the market often fakes weakness before squeezing out the last of the shorts. So you watch for the final push, that last desperate run higher, often on low volume, often thin and sharp. It's the blow-off top, the last gasp before gravity takes over. It's fueled not by smart money, but by the last wave of retail traders who think they're buying the dip, not realizing they're buying the cliff. And when you see it, you'll know, because the shift won't just be in the chart, it'll be in the psychology of the market. Buyers will start hesitating. Sellers will grow bolder. The imbalance that drove the rally will flip, quietly at first, then violently. Until then, you wait like a chess player holding a winning position, knowing the final move is coming. The market is tired now. It just doesn't know it yet. Chapter 4. The First Break. When Confidence Turns to Doubt. It always starts with one candle. Not just any red candle, a big one. The kind that erases several days' worth of gains in a single session. The kind that leaves traders staring at their screens in silence, wondering if it's just a healthy pullback or something more. You recognize it instantly. This is not random volatility. This is a coordinated hit, a moment when sellers finally stop tiptoeing and slam the bid. Volume surges, but not in the bullish, chasing way you saw during the rally. No, this is urgent, decisive selling. The reaction from the crowd is predictable. At first, they call it a buying opportunity. They rush in, expecting the same V-shaped recovery that saved them every time before. And for a day or two, it works. The market bounces. But something's different now. The bounce is weaker. The highs don't match the previous peak. It's a lower high, the first technical wound in the uptrend. You check the sentiment shift. Social media isn't as loud. The rocket emojis are fewer. The jokes are replaced by nervous questions. Is this the dip to buy? Should I hedge? This is where the psychology flips. Greed starts sharing space with doubt, and doubt is contagious. The tape confirms it. During the bounce, you see sellers reloading faster than buyers can absorb. Every attempt to rally is met with hidden sell walls. Big players are still offloading, but now they're doing it more openly. The stealth phase of distribution is over. Now they're pushing the market lower. Technicals start lining up with the story. Moving averages flatten, then begin to curl down. Support levels that held for weeks now break with barely a fight. Momentum indicators turn decisively south. And most importantly, volume is higher on down days than up days. That's the death knell of a trend. Emotionally, this is where most traders make the fatal mistake. They've been conditioned to believe every dip will recover. So when the first big one doesn't, they double down, adding to losing positions instead of cutting them. They tell themselves the market is just shaking out weak hands, not realizing they're the ones being shaken. You, on the other hand, don't fight it. You've been preparing for this moment since the first whisper of the top. You're light on risk. You're ready to play defense or flip your bias entirely. You don't need to predict every move. You just need to avoid being trapped when the real panic begins. The headlines shift next. Where the news once screamed record highs, now it cautiously asks if volatility is returning. Analysts who were ultra bullish a month ago start hedging their language. No one wants to be the last optimist when the market is clearly changing direction. Then comes the test, the key support level. You know it's more than just a line on a chart. It's the psychological anchor for the entire rally. As long as it holds, the bulls have hope. But if it breaks, that hope turns to fear instantly. And when it finally does break, it's not quiet. It's violent. Orders rush out. Stop losses cascade. What was once a steady uptrend turns into a slippery slope. Traders who swore they'd never sell are suddenly dumping in a panic. This is the moment you've been waiting for, the confirmation. The market has cracked. Confidence is gone. The crowd's mindset has flipped from how high can we go to how far can we fall. And once that question enters the collective psyche, the real collapse is only a matter of time. Chapter 5. The Collapse, and How I Stay Standing. When it finally breaks, it's not a slow fade, it's an avalanche. What began as a small crack turns into a wall of selling so fast that charts can barely keep up. The green candles that once felt inevitable are gone, replaced by a sea of red so relentless it feels like the market is in free fall. The air changes. It's not just numbers on a screen anymore. It's emotion, raw and heavy. Fear is everywhere. The same traders who swore they'd never sell are now rushing to the exits. They're not thinking about strategy. They're thinking about survival. And survival in panic is never clean. You watch it unfold without rushing in, because you've been here before. You know that trying to catch a falling knife is how traders bleed out. In the collapse, you don't guess bottoms. You let the market exhaust itself first. You let the emotional wave crash completely before you step into the water. The headlines are hysterical now. Media outlets that were celebrating all-time highs a month ago are running fear pieces. Bloodbath, panic selling, investors flee. Analysts are tripping over themselves to lower targets they once swore were conservative. The tape becomes a battlefield. Bids evaporate. Every small bounce is sold into within minutes. You can see the capitulation, the desperate dumping from traders who finally accepted the rally is over. This is the opposite of euphoria. This is surrender. And here's where your preparation pays off. While others are being forced to liquidate, you're sitting on cash. You're calm. You've already booked profits from scaling out during the top. You're not here to join the panic. You're here to survive it, and maybe even use it. Your strategy is simple. Protect first, profit second. You don't take unnecessary risks. You wait for confirmation before entering any new trade. Stay emotionally detached. You don't let the red flood your thinking. Fear crowds judgment just as badly as greed. Wait for structure. You only look for entries when the chart starts showing stability, higher lows, stronger bids, reduced volatility. Because collapses don't just destroy portfolios, they create opportunities. The best trades often come after the worst sell-offs, but only for those who are still standing when the dust settles. That's why your entire focus during the collapse is on survival. The crowd doesn't understand this. They think the goal is to win every market move. But you've learned the truth. In a collapse, the win is simply to avoid being crushed. Because when the market finally does bottom, you'll be one of the few with capital, clarity, and courage to act. You think back to the first whisper of the top. How obvious it seems now. The euphoria, the cracks, the first break. Most traders only recognize the pattern in hindsight, but you've trained yourself to see it in real time. That's the edge. That's how you stay standing. The collapse eventually slows. The candles shrink. The panic selling burns itself out. And just like that, the cycle resets. The market will build again. Sentiment will heal. And one day, there will be another top. And when it comes, you'll spot it, just like you always do. Because for you, this isn't just about calling market turns. It's about mastering yourself, so you never become the trader caught at the peak, frozen, watching everything you've built disappear. You've survived another one, and you're ready for the next one. Conclusion. So there you have it. My complete process for spotting market tops before they collapse. From the first whisper of a shift in sentiment to the loud and messy avalanche of panic selling, every top follows a rhythm. And if you've been paying attention, you've seen how each phase connects, from overconfidence to exhaustion, from cracks to breaks, and finally to the full-blown collapse. The key takeaway here isn't just the technical patterns or the order flow signals, though those are critical. The real lesson is psychological. You can't see a market top clearly if you're emotionally attached to the rally. The traders who get trapped at the very peak are almost always the ones who want the rally to continue, who ignore the signs because facing them means admitting it's time to step aside. But when you detach, when you step back and observe the market like a scientist instead of a gambler, you start seeing the truth. You spot the shift in volume before price turns. You notice the headlines switching tone. You feel the subtle change in how traders talk. These aren't coincidences. They're the footprints of a top. And when you learn to trust those footprints, something incredible happens. You stop chasing the last few percent of a move. You start protecting your capital before the fall. And you position yourself so that when the crash comes, you're not just surviving it, you're ready to take advantage of the opportunities it leaves behind. That's how professional traders stay in the game year after year. It's not about being right all the time. It's about avoiding the wrong side of the big moves. Now, I want to hear from you. Have you ever spotted a top before it happened? Or have you been caught in the euphoria only to watch the market turn against you? Share your story in the comments below, not just for me, but for the entire trading community here. Because every real-world example helps someone else avoid making the same mistake. And if this deep dive helped you see the market differently, do me a quick favor. Hit the like button so YouTube shows this to more traders who need it. Make sure you subscribe and turn on the notification bell because I've got more in-depth trading psychology videos coming that will teach you how to read the market like a pro, from bottoms to breakouts, from fakeouts to true reversals. Remember, market tops aren't rare. They happen over and over in every market, every time frame. The traders who survive and thrive are the ones who learn to spot them without hesitation. The next time you see that dangerous mix of overconfidence, overextension, and subtle exhaustion in the market, you'll know exactly what's coming. And when the crowd is still celebrating, you'll already be stepping aside, smiling quietly, waiting for the collapse you knew was inevitable. Stay disciplined, trade smart, and I'll see you in the next video.